Hey guys, how are you doing? And then today we are quite happy to announce actually our Falcon portfolio just reached a new high yesterday, and it reaches to 75% after 16 months. That's a new high, right? So I'm quite happy because actually I hold those stock. It's not a virtual portfolio, it's a real portfolio. And actually I hold about 80% of the stock listed in the portfolio. So I hope you will have some, right? So actually today we will discuss a little bit about the property and the REITs. Why is that? Because those stocks been raised for more than 50%, and then it raised very sharply after the March. Why? Because the inflation is coming. Because a lot of countries print the money low, not only America. A lot of the newspapers saying that is because of America. I don't think so. But America is one of the reasons, because you know that US dollars using rate in the whole world is 62%. RMB in the whole world is less than 2%. Of course, in China is 100%, but in the whole world it's just 2%. But US dollar in the whole world is 62%. It's leading. But not only America is printing the money. Brazil, Europe, UK, Hong Kong, China, they all print money notes, but just in a different extent. That's the reason. So actually inflation is really coming. So I will show you some inflation figures during video, and then if for any topics, any subjects you want me to discuss, you can directly email to me by usstockmarketweekly@gmail.com. Let's start. And this is one yesterday for the Wall Street Journal, 3 stocks being listed, and then one of them is Simon Properties. This is Simon Horse, right? You know that I never came to this place. I want to, but I think it's not in. I think it's in the States, right? That is Simon Horse, and I know that it's now become better after the pandemic because it's less cases in America, and then a lot of cities. You can see that some of people without the mask, they take off the mask after the vaccine already. So actually this is recovering, and then 3 stocks is being discussed in the Wall Street Journal. Then we will introduce them a little bit, and then introduce why a lot of people or a lot of investors rushed into the property and the REITs market because they can resist inflation. Is it? So let us discuss. This is our Falcon portfolio, and then because previously I forget to mark it. I usually just use my brain to remember, so it's not very good, right? So actually I marked it down onto the spreadsheet. You can see at the bottom there's red letters. Whenever it breaks the record, I mark it down with the day. So actually now is yesterday night in Hong Kong, it reached 75% after 16 months. Not up to 17, is 16 months. Actually, yesterday Dow Jones drops 210 points. The tech stock rises. Why? Because tech stock can beat the inflation. Believe it or not, I think so. Tech stock can beat the inflation. And then for traditional one, maybe just so. That means maybe in the same pace as the inflation, something like that. Let's begin. And this is appeared yesterday in Wall Street Journal. You can see there is 1, 2, 3, 4 lines, right? After March of this year, you can see the bottom one is the S&P 500. It's the bottom one. It just increased a little bit for 6 or 7%. But you can see the top one, the light green one, is the Boston property. it increased more than 22%. Equinix, the data center, the stock increased nearly in the same amplitude as Boston Property. And then even Simon Property rised to very high and then dropped it, but still more than 15%. Why? Because the inflation is coming. And the smart money and the smart investor, not me, I'm not smart, right? I'm just old. I'm not smart, right? The smart investor or the smart money rushed into those property REITs. Why? Because inflation is coming. And Fed already announced that probably will increase the interest rate when? Just at the end of 2023. End of 2023. That means 2 years later. More than 2 years later. So how can we resist the inflation during these 2 years? And that means, or does it mean, the Fed will continue to print the money low? I think so. In order to keep a steady growth or a steady recovery of the small enterprises in America. So some of people may say that, oh, only USA print the money low. Do we need to? Yes. Because everyone in the whole world, to a certain extent, related to US dollar. Unless Africa or unless the third world countries. Otherwise, all in certain extent related to US dollar. If US dollar print the money low, or if US dollar increase the interest rate, you not follow, then you have a gap if you do business with America. That's the reason. But just the extent is different. That means this inflation phenomenon may be quite common in the whole world. It's just the percentage. So this is all we know, that Simon Properties is a very old REIT, right? Very old one. And she is doing the shopping malls, right? She's doing the shopping malls. And we know that Gap is very dangerous, right? Gap still exists, but I think Gap still exists, but actually it's not in a good shape. So actually, if my memory serves me well, JCPenney already broke, right? But actually, Simon Properties will buy all the shopping malls, because, you know, if you let JCPenney broke, no one buy it, and then the shopping malls prices, the rent will go down sharply. So she will bought it up. But the point is, actually now is recovering. I don't know, maybe now goes better. I don't know. But actually, JCPenney is already broke. It's quite unfortunately. You can see the Simon Properties share price. After the pandemic, it's been quite bad, behaved quite bad. But after 2021, it rise up very sharply, and then now, nearly back to the level before the pandemic. You can see that. With a good dividend of 4%, a very high one in American stock. And then PE ratio, quite high, 36. Normally, for the REITs properties stock, the PE ratio is about 19 to 25. Now it's very high because money flow in. That's the reason. Another one, Boston Property. We know that Boston Property is famous for what? For office buildings. For office, not shopping malls. And then we can see the Boston Properties share price still goes up, but not as high as Simon Property. But also from the low position of 2020, I think it's about 70, and then now rise up to 120. That means rise at 80% already. And then the PE ratio also quite high, 40, with a very good dividend of 3.29%. Very good dividend. And the reason is because during the inflation, the rental rate will short means increased sharply. Let us see the reason. Will estate investment resist to inflation? That is the very basic concept of doing investment. When I can't remember how long, more than 20 years before, when I just go into and then read the books. I buy some books and then I read the books about inflation, about real estate, and then you know that all of them related to stock, right? They just change the real estate and then packed it up like the stock. And then this is the fundamental of ABC for inflation. And then our real estate investment resist to inflation? And the answer is yes. So you can look up on this diagram. Through this very long year study and countless others, that's shown that housing prices, that means apartment prices, over the last 120 years have followed the rise of inflation, at least following it, if not exceeded it. That means at least in the same amplitude. You can see at the bottom part, after 1997, the inflation once been very high and then dropped it down very sharply now to nearly no inflation, 1%, 2%, right? And then the apartment prices nearly in the same periodic as the inflation. How does inflation affect the real estate market? You can easily look up the answer on the internet. First, property price will increase. Same in Hong Kong. Same in Europe. Just the amplitude issue. Or if your country will have some political reasons to stress it. Otherwise, if according to free market, it will. First, property value will increase. That means your property price. And the second, very important, the cost of borrowing will be higher. You have to borrow the money for the first installment of the house, right? So the cost of borrowing will be higher. That means the bank will earn more money because the interest rate. And then third, the rental rate will soar. That means the rental rate will increase. So the people have the motive to buy the house because you can rent it out and the rent will increase. And then after some time, for the monthly installment, the rent may cover the monthly installment or cover 70%. Then your burden will be lessened. So that's the concept for a free market. Pay attention to what I say is free market. Some of the country, they strictly control that, then that is not a free market. We are not discussing them, right? So even in America, in Hong Kong, in Europe, property price will increase during the inflation. Why is there inflation? Because too much money. And then the commodity unchanged, not less, unchanged. Because too much money, and then the commodity, number of commodities like the meat, like the REITs, like apartments, unless you suddenly increase a lot of apartments. Otherwise, the number of apartments will not increase. So it's a lot of money. People have money and then they buy the things here, buy the things there, and then the things will be more expensive because the commodity number didn't change. That's the reason. You may probably ask me, what the hell does it related to the data center? Because data center, Aquinas is also a REITs. But the point is, she is not renting out an apartment or an office. She is renting out the data center. That means she is renting out the memories. You also use the server as well for a long time already. Aquinas is a very old stock, very old stock. So I have searched this from the internet. You can see, actually, what's a REITs? Do you know what's a REITs? A REITs is different from a property company. A property company is you need a lot of money. You need to borrow the money, wherever it's from the bank, from the public, and then from your stockholders, from your shareholders, I don't know, right? You raise the money, and then you build a building, and then you sell it out, or you rent it out. That's the normal procedure, right? But for REITs, it's different. You already have those properties on hand. So every month, you have the rent inside. You have the income. The income is the rent, right? So you use the rent, deduct everything, and then you have a profit. At the time when you use the REITs for the IPO, you have to agree certain percentage, a large percentage. I remember in Hong Kong it's about 80% of your profit. You have to be give out to all the shareholders as a dividend. I think it's in the same concept. Just in Aquinas, it's not apartment, it's not a unit, it's a data center, it's the memory. Of course, you also use the server, right? So you can see in the past many years, all the income of Aquinas increased for every single years. The orange color is the Apac Income. What is an Apac Income? Is the income from the Asia, Pacific, and Atlantic countries. That is an Apac revenues. MEA revenues is from Europe, Middle East, and America, and Africa. And Africa. And then AMER, all we know that is the income from America. So the income from America, actually I should call it revenue, because revenue in English, it just means how much money flow in, and then income is the net profit, right? So the revenue for America is still the highest portion, and then is EMEA, and then is APAC. You can see every single year they increase. So this is a very good stock, right? And then they forecast, now is 2021, and then they forecast next year even higher. So you can see the actual result of Aquinas, right? For the past 20 years, 2002 is about $10. Today, 800 something. That means it increased 81 times since the last 20 years. I think it beat up nearly every stock, right? I think so. And then it has a dividend, 1.71%. And the PE ratio is high, we know that, right? So I always say that actually for now the REITs, the PE ratio is a little bit high, because in certain extent I think it's 120, 130 something. Why it becomes always high? Because the money flow in. Even for the past 1 year, within the pandemic, you can see the 52 weeks low is 568, and the 52 weeks high is 839. The difference is 250. That means nearly 50% increased it, 45% something in the past 1 year. So it's just dramatic. That's what it is. And another reason that the smart money or the investor, they have to change to buying the stock or the REITs or the property, or directly buy the property, is because the current interest rate is too low. You can see the 10 years USA Treasury bond, how much is the return? 1.569% per 1 year. Of course, you can trade the bond, right? That's it, another issue. And the property stock dividend, how much is that? 2.6%. And then S&P 500 index dividend, how much is that? 1.4%. And then what is the inflation rate of this year? You can see 5%. So you lost. If you're not investing in a correct commodity, then you will lose. You will lose 4%, at least 3%. And the smart money, they won't lose, they want to win. They want to have the return at least in the same altitude as the inflation. That means 5%. So I have found up in the internet. This is for America, right? Not the whole world. This is only for America. You can see the annual inflation rate by month and year. In the past few years, you can see very clearly 2013, nearly no inflation. And then 2016 continuously to rise up already. 2017, 2018, you can see is soars up to 2%, nearly up to 2.9% already. And then in 2019, in April, it still rise up. And then it's being treated a little bit. But in 2020, then it drops. Suddenly it drops. In the April, in the May, in the June, in July, because there is the pandemic. I don't know. I don't have the figures for the pandemic affecting the inflation rate, right? No people come out because no people come out, and then gradually it becomes a little bit steady. But because America, they print the money note, and after the pandemic, all countries, all the governments, they want to recover, then they print the money note. Why they print the money note? They print the money note is because for some small enterprises, not for Apple, not for Microsoft, they are big, they have a lot of money. But for the small enterprises, they are at the edge of dying. They're at the edge of dying. So you have to give them the money note so they can survive. So after they recover, then they still survive, then they can recover very quickly, very swiftly. So that's the point. But the point is the government, she doesn't know when is the equilibrium. She don't know. She just doesn't know when is the equilibrium. So she keep on printing the money note, make those enterprises survive, become healthy, and then can earn money, and then they retrieve the money from the market. That's the whole idea. But in between, the inflation is very high. You can see in the 2021, what is the inflation rate of March? 2.6%. How is it in April? 4.2%. How is it in May? 5%. 5%. You may ask me, why Biden is not just, okay, I stop it. I stop printing the money. No, you can't because you don't know. And then now it's for big construction. We know that it is for big construction. And then spend a lot of money for the chips. Spend a lot of money for the environmental protection costs and the battery. So a lot of money is floating in the market. So why she said 2023? Because now she cannot stop the water tap. So the smart money have to find some way in these 2 years not lose to the inflation. If you lose 1 year, you lose 2 years, you lose 10%. But honestly, I tell you, it will never be 5%. Trust me, in Hong Kong, if the government said, okay, the inflation rate is 3% or 4%, so this is misleading. If you rent a house, if your house is rent, not your own house, at least your inflation will be 7 to 8%. If you have your own house, no installment, that means you own it already. You return all the you pay back all the money to the bank. Maybe your inflation per year is 4 to 5%. If you rent the apartment, at least it's 7 to 8%. So that's why the smart money have to invest on something that can resist to the inflation. So I think we should think about it, right? And one of the way is the tech stock, because tech stocks increment is very high. Yesterday we see the AMD soaring, and then now Nvidia is soaring. I should buy the Nvidia and actually, right? And then for a lot of the, even for PayPal is going up, and then Adobe is doing very good. We have to buy those things because they can beat the inflation. Otherwise, if inflation beats you for 1 year, 2 year, 3 year, then you will lose 15%. All right, that's the reason. So if any one of you have the interest in those 3 stocks, actually I have in Hong Kong channels been discussed about Equinix already in the pay versions. So if any one of you have more interests on those Simon Properties, Boston Properties, and Equinix, you can leave your message. Then I can analyze further in this English channel. Okay, so actually today we share up to here, and then thanks for watching. If you like this video, then please give me a like, give me a thumb, and then if you have some friends you think they will also love this video, please share to them, and welcome for your comment under the YouTube, and then please press the subscribe button and the bell icon, so whenever there is new video uploaded, then you will be notified. Okay, we share up to here, and let us meet in the next Friday, and I wish everyone have a very peaceful weekend. Bye bye.